PDAC 2018. We're here at the booth of Oreninc, and I'm joined today by John Kaiser of Kaiser Research. Thanks for coming on. Appreciate it. It's like, do we do the handshakes thing? I've seen that in videos happen.
Yeah, transfer all the diseases that people have brought
we got disinfectant over there, sanitizers.
By the flu shots, which are missing them all this year.
Yeah, exactly. No, it's like one of the tricks. Like people told me, Kai, you got to get a bottle of hand sanitizer this year for PDAC.
Yeah.
Flu epidemic everywhere. It's been busy. I think it felt a little slower than last year, just by feeling. I haven't seen any numbers from PDAC yet. What's your overall impression after the first 2 days?
My sense is that there's a certain subduedness. There's a lot of people here in that, but there's concern that it's our turn for the resource sector to finally go into a bull market again. Metal prices have gone up, not spectacularly, but they are much better than they have been in general. The global economy is in sync, it's growing, but we are seeing the normalization of interest rates. But the big elephant in the room is the President of the United States really going to unleash a trade war with protectionist trade tariffs and disrupt all these interwoven supply chains and tip the global economy into the garbage can? And so there's a degree of hesitation here and fear. Come on, it's our turn. This blockchain stuff and cannabis stuff, that's a big bubble. It'll blow up and all that. The risk capital will come back into this sector. So we're in kind of like a
limbo state.
Yes, a limbo state.
Yeah, we were exchanging emails beforehand, coordinating this interview here, and it's like I was really close to calling a bear market. That we're back. Like we've seen, like 3 weeks ago or 2 weeks ago, we've seen only 13 financings opened in the overall market, and that was the lowest since January 16, just the end of the bear market. So you said no, it's just a low, right?
Well, yeah, actually that's maybe wishful thinking, because the bear market started in 2011. We had that surprise reprieve in 2016, and that faded in August, and what we're expecting to be the Trump effect, like all the craziness. It hasn't really made gold go up the way it should with all the geopolitical instability that his policies apply. But what was depressing is that venture-listed companies that are in the resource sector, and there's about 1,200 that I cover, they have descended to being 20% of the traded value. Historically, the norm is 40 to 60%. So we have seen a massive shift of risk capital into these cannabis and blockchain type stories. And to me, it frighteningly reminds me a bit of March 2000, where we had a similar situation where, resource stocks, nobody cares about the expiration play, but companies that say, oh, we're going to investigate mining crypto or something, boom, away they go.
Shut up. Yeah, exactly. That's just companies using buzzwords in their company title, right? They're just appreciating immediately after the press release, right?
So one of the problems is with the blockchain stuff, it's all, there's no fundamental value, it's all just momentum. With resource plays, you can always quantify the upside limit. A deposit's going to have a mine life, it's going to have this cash flow, it's going to be discounted. You can say the maximum this can ever go up in the absence of the metal price going to the moon, it's this and that.
Exactly.
So people can sort of like just depress these resource juniors, whereas with blockchain,
no.
Well, what's the limit? The sky's the limit. Until the sky falls.
And that will happen eventually. And we've seen a lot of increases in financing activity on the CSE, which actually is a lot of battery metal that's sort of carrying the sector right now. It's not the gold financings, it's more the battery metal space that's taking all the attention. Right. Do you see that trend continue here at PDAC?
You know that there's supposedly a lot of buzz here about battery materials, but lithium is cresting. There's lithium coming on stream. The whole system is working, new supplies being mobilized. Cobalt's still interesting, but Congo, Katanga Mining's own resources, global resource from all those projects, that's 20 years supply of total global supply at 0.5% cobalt as a byproduct of 3% copper. I mean, like, if the Congo is stable, we have no cobalt problem.
No, Glencore is not interested in opening the floodgates.
Well, they don't want it to go too high, because there's a huge trend out there to shift away from utilizing. It was the same thing that happened with dysprosium, with the neomagnets during the rare earth craziness of 2010, 11, and now they need a lot less dysprosium, and they're doing that with cobalt. But there's even stuff like magnesium ion battery. There's new technologies coming in where they have a solid state electrolyte, and if this works, boom, lithium ion battery is dead. So I think all the hype of electric vehicles, it's not sustainable. People are going to get bored about hearing that in 2025 electric vehicles will be 10% of the market. So we're probably at the peak of the at least the correlated battery materials craze.
Okay, interesting. So we're here at PDAC, obviously. Do you see a trend besides the battery metal space that sort of emerged? Zinc, nickel, copper. What's the buzz? Or what's the one metal you heard most about the last couple days?
There's such a broad range of stuff here, all the sort of sectors. I mean, like yesterday, I'm at Strongbow's little whatever get together, and they're of course talking about tin, and he said tin was the biggest dog during the big China super cycle. Like, is tin going to be the next metal? So, but this is like a handful of a few companies talking about. So, is it meaningful? Is that buzz? I think it's probably like the stuff what everybody's been talking about, lithium and cobalt. That's what you sort of hearing about, but by the time it's all a buzz at the PDAC, it's kind of fading anyway. So zinc is what should be the buzz about, because zinc's at $1.50. The warehouse mountain is almost at the level it was in 2007, and we could see zinc spike to $2, but the markets have been kind of hesitant to really go into zinc because they've been sort of tricked before. But I think this time it's a bit different. China's supply growth has stopped. Their environmental crackdown is taking effect, and new supply is still a ways down in the pipeline. So we could see zinc spike over $2, and maybe that's what it takes to make everybody go crazy.
I was just going to ask you as well, like to wrap things up as well. What is a potential trigger for retail investors coming back into the space? We're lacking complete retail buying right now, and when do you see that happening? Sort of as a wrap up.
Okay,
here.
There's two things. One, gold has always mesmerized the retail audience, and if gold starts to break out, and it does it for reasons that aren't inflation and things like that, so people can see that, wow, the real price of gold is going up, that could do the trick. But more importantly, a huge discovery. And the space is now so big that your typical, like a Bre-X, wouldn't really do it anymore. And that's why I've been following this Novo play to see if indeed they've come up with evidence that maybe the WITS 1.0 that exists in South Africa, all the past exploration didn't quite look in the right place, and that maybe there's 1 billion ounces there at an economic grade and mineable to be found. And something on that monster scale, that is what would bring retail investors back, get the glass half full for discovery exploration type plays. And that's where you make the most money. Institutions go into the advanced optionality plays, and it's a big number crunching exercise, but we need the excitement of some off the scale discovery and the potential to duplicate it to get back in the system.
All right, John, thank you so much for joining us here. I appreciate it very much. And thanks for tuning in.